Let's take a look at the classified balance sheet. In the classified balance sheet, we are going to categorize assets and liabilities into new categories. Recall that a balance sheet is reporting the assets, the liabilities, and the equity balances of a company at the end of an accounting period. In the past, we have just simply listed the assets in a list, and we categorize them by whether they are short-term or long-term assets, current or non-current. And simply the way we define whether something is current or non-current is the intent that management has about how long to hold on to an asset or convert it to cash. Any asset that is used up or converted to cash sometime within the next fiscal year or current operating cycle would be considered a current asset. Any asset that management intends to hold on to beyond the next year or operating cycle is considered long-term. And typically companies will have really only two categories of long-term assets. Those are plant assets. Think of them as property, plant, or equipment. These are the assets that management has purchased and they intend to use them in order to operate their business. They do not intend to hold them for resale. Their intent is to hold on to them for beyond the next year long term. Additionally, intangible assets are long-term resources, assets that you can't see, you can't feel, you can't touch. They're intangible. And they are also going to be used and held on to beyond the next year. Examples of intangible assets would be patents, trademarks, copyrights, franchises, and goodwill. Within liabilities, we have new categories. We break down liabilities by whether they are current or long-term. Just as with assets, the amount of time to consider something as current is within 1 year or operating cycle. So any liability or any debt that needs to be paid or settled sometime within the next year needs to be classified as a current liability. Any liability or debt that does not have to be paid off within the next year or operating cycle, in other words, it doesn't have to be paid off for beyond the next year, is considered a long-term liability. If we were to take a look at a balance sheet, here is a balance sheet as of December 31st for this company, and we are seeing here within the assets, all of the assets are listed. But notice that instead of just listing them all into one grouping, we have broken them down into current and non-current or long-term plant assets. Within the current assets section, we are seeing the assets that the company intends to use up or convert to cash sometime within the next year or operating cycle. And then we're seeing here listed the plant assets, or the assets that the company owns that it intends to hold on to and use in operations beyond the next year. Down here in liabilities, we are seeing that all of their liabilities are current. All of these liabilities have to be paid off sometime within the next year or operating cycle. They don't report any long-term liabilities. If they did, they would have a separate section for long-term liabilities following their current liabilities section prior to the equity section. Nothing new is reported here in the balance sheet from what we have learned in the past. The only thing the classified balance sheet does is it classifies assets by whether they are current or non-current, long-term. Liabilities as to whether they are current or non-current, long-term.